Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, September 9th, 2023. How you doing? Appreciate you stopping by for another edition of my weekend review podcast. And in this podcast, let me tell you what the format is going to be. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the trades I made last week, both on the daily and the weekly time frames. We're going to talk about when I entered the trade, why I entered the trade, and of course, most importantly, how I am going to manage the trade going forward. You know, unfortunately, we have no control over what the market is going to do when we enter a trade, but we have to know exactly what we are going to do based upon what the market does. And in general, that consists of first being patient, waiting for our setup regardless of the different type of setup we use. I use deep dip buy setups, return to value V1, V2 setups, higher low V1, V2 setups, moving average crossovers, double bottom bullish divergence. There's all sorts of different ways that you can trade, but if you need to be patient, you need to wait for whatever signal that is setting up. And then when you enter the trade based upon your signals of what you're using, you need to position size based upon the current market volatility. In my case, I use 1% of my capital divided by the value of the 2 ATR. That tells me exactly how many shares to enter the trade with, whether long or short. Then I need to know where my emergency stop is. In the worst case scenario, where that's going to be, I need to look for a good risk to reward ratio for my end of day stop. So if I'm wrong very small, then I take partial profits. If it moves my way, once I get to trailing stop level, then I go into trailing stop mode, which tightens up my stop a little bit, helps reduce the risk. So you need to have a process of, regardless of what the market does, you know exactly what you're going to do. And that's what I will explain to you today in the podcast in my trades. So, the market was interesting market last week, and near the end of the podcast, I will take a look at the markets in general. We have some support below, we have some resistance above. So yeah, it was kind of a difficult market last week for us. We had a bit of we had that big rally, then we had a bit of a sell-off. But that's the markets, right? We have to deal with what we have. So that's going to be, like I said, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my trades, when I entered them, why I entered them, what was the trading signal, and then how I'm going to manage the trade going forward, winning or losing. After that, we're going to talk a little bit about trader psychology. Always the most important skill in trading is the ability to create a plan and then follow your plan without letting your emotions get the best of you, making you stick to the plan. After that, I have gone down through my master watch list, both on the daily charts and the weekly charts, and I will show you the trades that I'm looking for next week. Now, they're not going to be where they need to be today, but I'll show you the levels. If and when they get there, then I will consider taking the trade. But it's important to be patient. It's a great idea on Saturdays to just go through your watch list and go through and go, geez, okay, XYZ stock right here. It's not where it needs to be. I need it to come down to this level, reject this level, give me a good risk to reward ratio, and then I'll consider entering the trade. And so that's what I've done. I've gone down through my watch list on both the dailies and the weeklies and highlighted the trades that I'm looking for next week, if and only if they get to that location. All right, so that's going to be the plan for today. And like I said, I will talk a little bit about the market in general near the end of the podcast. So first of all, let me run this U.S. legal disclaimer. We'll get that out of the way, and I'll be back in about 40 seconds. So hang tight. Thanks so much.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, let's get started. So these are the trades that I'm currently in and the trades that I took action on last week. And by the way, um, if you're new to this channel and you're watching this, you'll probably realize that I do have a lot of rules depending on the strategy that I use, but the rules are here for a reason. I've been trading for 28 years, and every single thing I do, there is a reason for it. And you might think, oh, this is complicated and so forth, but it's really not complicated. And if you are interested in learning these in detail, I do teach a private one-on-one course in the evening time via Skype. One-on-one, I think it's the best way to learn. It's a 15-hour course, 5 sessions. Each session is 3 hours, and I've taught people from all over the world, from absolute beginners to hedge fund managers. So if you are interested, my email is in the link at this description here. And if you're interested, just reach out to me, send me an email, and we get the process started. But it's a great course. I've taught so many people in this world, and they've all been very, very happy with it. So if you want to learn the skill of trading and you want to learn all about these rules, just contact me and we can set something up. And I'll talk a little bit more about it at the end. So, all right, here we go. Zions Bank. Okay, now Zions Bank was a short that I took all the way back on the 28th of July. Now, what you'll notice in the trades that I have, whether they're winning trades or losing trades, if I'm in a good trade, or in other words, if it's a profitable trade, you're going to see me in this trade for quite a while, because it's very important to get out quickly when you're wrong, and it's very important to stay in and give some breathing room to your trade when you're right. So you want to be very impatient with your losers, and you want to be very patient with your winners. So you'll see the trades that are profitable for me, I'm in them for quite a long time. The trades that are not profitable for me, I am out very quickly. And this is one of those trades that I've been in a long time because it has been profitable. So right now, or back here on the 28th of July, I entered a short on Zions Bank, ZION, at 38.20. Now, why did I enter this? Well, as I mentioned at the beginning of the podcast, we want to be very patient and wait for your signals to line up, and ideally wait for multiple signals to line up. And this was one of those situations. So the day before, you see the black line, this is the 200-day moving average. What happened on this day? Multiple things happened on this day. We went above the 70 RSI during the day, and it closed below. A lot of stocks, whether it's to the long side or to the short side, in this case short side, if they reject the 70 RSI, they either close above, close below, or intraday they go above and close below. Large percentage of the time, almost 90% of the time, when they do that, that's about the top. Well, on this day, it did that. It went above 70 and below 70 during the day. Okay, that's one clue that we may be near a top. We also rejected the 200-day moving average, which is the black line here. We went above it, closed below it. So there's two signals here that show me that this is very close to the top. In addition to this, we have an RSI divergence. Again, this is something that I teach in my class, but look over here. The high that we had here, do you see how high the RSI level was here? And then we went down, and then we went higher. But even though we're higher, do you see how the RSI level is lower? That's called a bearish RSI divergence. So all sorts of clues here telling us this is probably near the top. Now, it would have been legitimate to short right here, but it was a little far away from the 200-day moving average, because a close above the 200-day moving average is my stop, right? Remember, I have a end-of-day stop, so the reason I took the trade was because it rejected the 200. So any close back above that 200 would get me out of the trade. And this was a little far away from the 200, so I was patient, and I waited one more day to see if we could get a close a little higher, which would give me a better risk to reward ratio, which is exactly what happened. And I got short here at 38.20. So I took 1% of my capital, divided by the value of the 2 ATR. That shows me how many shares to buy. Then I place my emergency stop, that exact number, whatever the value of the 2 ATR was, above my entry. That's up here. So in the worst case scenario, if I get there, I lose 1% of my capital. That's my emergency stop. My end of day stop is just simply a close above the 200-day moving average, which it has not done yet. And then, so I'm talking about risk first. Risk is position sizing correctly, having a good risk to reward ratio, placing your emergency stop, your end of day stop in this particular case is just a close above the 200-day moving average. So these are all defensive things I'm thinking about first. I'm not thinking about profit at all. Now, so I've got those taken care of. Position size, waited for my signal, position size, emergency stop 2 ATRs above, end of day stop, close above the 200. Now let's talk about some profit things. Well, first thing on the profit is I place my trailing stop level exactly 1.5 ATRs below my entry price. Once I get here, or if I do get there, then if I get a close above a previous bar's close, I just simply get out of half the position. Now, another profit sector that I look at is taking partial profits. I will always take 10% of my position off if it moves the value of 0.45 ATRs from the previous day's close. So I shorted here. The next day, it moved down, but it did not move the value of 0.4 ATRs. But on the very next day here, from the close, it did move the value of 0.45 ATR. So I take partial profits. I always want to take partial profits when the market gives me something. So rejection of the 70 RSI, rejection of the 200-day moving average, bearish RSI divergence here, position size, place my emergency stop 2 ATRs above, end of day stop, close above the 200-day moving average. As it moves down, the value of 0.45 ATRs, I take a partial profits. Once I get to trailing stop level, now I'm in trailing stop mode. Okay, so that's the setup. Got short here. Next day moved down, but not enough to take profits. Next day took some partial profits. Next day moved down, took some partial profits. Also got to trailing stop level, which means that now in the future, if I get a close above a previous bar's close, I will exit half of the position I have remaining. And that happened the very next day. Do you see how we got to trailing stop level and then we closed above the previous bar's high? And I got out of half for a gain of 2.75%. So lock that in, reduce my position size, reduce my overall risk. In the future now, if it closes above the 200-day moving average, I'm simply going to get out. Next day didn't do anything. Next day gapped down, took some more profits, right, while I had them. Moved up, but still not strong enough to close above the 200-day moving average. Then we had a nice big leg down here where I took multiple partial profits on each day that it moved down. So continuing to lock in profits, continuing to reduce my position size. Then we had this move up here, and I thought, well, we may close above the 200, but we never did. Then we had another series of days down, took more profits here on Friday, and then we had a reversal back up. So it's a great trade so far. Taking the partial profits, in my opinion, is very important. You can see I locked in a lot of profit here on the way down here and a lot of profit in the way down here. And, at this point, if it closes above the 200, no biggie, because I've already locked in so much profit here, here, and here that my position size at this point is very low. So if it continues to move down, I will continue to take profits. If it gets near the 35 RSI level, then the 5 EMA comes into play. If it rejects the 30 RSI, then I have rules for that as well. But currently, the remaining position that I have here on Zions Bank, up 9.33%. All right, that's the only open day position I have. Now, excuse me, my gosh. The rest of these trades are closed trades that I had on the daily. Like I mentioned, the market was not so kind last week, but I'll show you why the rules that I use, the partial profit rules, the trailing stop rules, you'll see why they're so valuable, especially in a week like today, a week like last week, where we got entry signals and then it reversed on it, we have to stop out. But you'll see the value in the rules that I use and the rules that I teach in mitigating the losses, right? Because we're not always going to have just completely straight up weeks. Okay, this is GDX. I took GDX back here on the 28th of August with something which is called a higher low V2. And if you would like to learn more about V1s, V2s, you can go to my YouTube channel. I have a lessons playlist in there, and I have a video, it's totally free, on V1s and V2s. They're a big part of my trading. I use them in a lot of my setups, and a lot of people have had very good success with them. So just go to my YouTube channel, look for the V1, V2 video. So this is what's called a higher low V2. You see the two green lines here? This is called the value zone. Anywhere below this green line, anywhere above this green line. So anywhere in here is the value zone. This is called the higher low V2. We obviously closed below the -1 ATR channel or the green line here. Then we rallied into the value zone. Then we had a pullback. Then we had a V2. Here's bar 1, bar 2, bar 3. V2 always consists of 3 bars. Bar 2 goes below bar 1's low, which is a requirement, and then closes above bar 1's close. That is your signal, called a higher low V2. Then, of course, you position size, you place your emergency stop 2 ATRs below. On a V1 or a V2, the end of day stop is a close below halfway of the washout bar, or bar number 2. So I got long here, 28.99. Again, my emergency stops 2 ATRs below. My end of day stops are closed below halfway of the washout bar. And then if it moves up, I start taking partial profits. And then I place my 1.5 ATR trailing stop level up here. So if I touch that level, then if I get a close below previous bar's low, I am out. So I got long here, 28.99. Next day, moves up nicely. I took some profit off, right? Reduce my position size, reduce my overall risk, lock that in. The market cannot take it away from me. It's very important. Next day after that, we move up again. I took more profits off, reducing my position size. On this particular day here, do you see how we touched the green line at basically $30? As soon as we touch that green line now, if in the future, if I have a close below a previous bar's low, I just get out of half. Well, that happened the very next day here on the 31st. So I sold half of the shares that I had remaining for a gain of 0.89%. Okay. Now I've taken these shares off on the way up. And then here, whatever was remaining, I took half off. So significantly reducing my position size. Now, the next day, we opened up higher, much higher actually, and I took off some more partial profits up here, which now that you look in the future, you say that was a really good idea, right? That's why I love taking partial profits. Not everything, but just a portion off to continue to reduce my position size. So we gapped up here, hit some more profit targets, then we move down, then we move down. You can see my stop is the orange line here, halfway of the washout bar. Interesting how it just touched it, closed back above, kept me in the trade. Next day, opened below it, closed back above, kept me in the trade. And then here on the 7th of September, it did close below the trailing stop level, and I got out on the remaining shares for a loss of 2.51%. But keep in mind, and this is where it really shows the values that the value of the rules that I use. Took off profits here, took off profits here, took off profits here, took off profits here. Here, first close below the previous bar's low after reaching trailing stop level, took off half. So this shows that it was a loss of 2.51%, but was it? Not at all, not even close. As a matter of fact, this was probably very close to a break-even trade because of the partial profits, because of the trailing stop rules. It was probably very, very close to a break-even trade. So this is a very good example of why taking partial profits and have trailing stop rules really help. Because if you would have just bought this trade and held it, yeah, you would have bought here at $28.99 and you would have sold here at $28.90, sorry, $28.99 and sold at $28.29 for an legitimate loss of 2.51%. Because of these rules, it was more like a break-even trade. Hope that makes sense. All right, let's go to UAL. All right, as I mentioned, if you see me in a trade for a long time, it means that it's a profitable trade. If it's a losing trade, I'm out very quickly. And this is a very good example of UAL. I did buy UAL here on the 6th of September, right here at 48.37. Why? Well, do you see how we came and bounced at the 200-day moving average? You see how the previous day below went below the 200-day moving average, the black line. So there were 2 days here where there were no more sellers under the 200-day moving average. Doesn't mean it can't go down, obviously, but it gives you a lot better odds that this level is holding and that it's going to go back up. Well, this didn't happen. Got in at 48.37. I position size. You can see this is my emergency stop down here. And then my end of day stop is simply a close below the 200-day moving average. And it happened the very next day. A lot of the times, if I am wrong on a trade, I will be out in 1 day. Compare that to the Zions Bank short, where I've been in it for weeks and weeks and weeks because it was what is profitable. So when it's profitable, stay in there. When it's unprofitable, just get out of there as quickly. And this was a 1 day trade. And, showing if you have a 1 day trade where you're in and you're out, that means you're really using good trading principles and getting out quickly when you were wrong. So got in at 48.37. Very next day, closed below the 200-day moving average. So I'm simply out of the loss. Small loss, 1.47%. But the main thing here, I was wrong, so I immediately get out. So this loss here, 1.47%. Pfizer. This is an interesting chart as well, and it really does show, again, why using the trailing stops and the partial profit method are so important in trading. This one's a higher low V2. We talked about, higher low V1. We talked about a V2. This is a V1. V1s consist of 2 bars, bar 1, bar 2. So we're below the value zone. We rally into the value zone. We pull back, and then here is a V1. Bar 1, bar 2 goes below bar 1's low. Bar 2 closes above bar 1's close. I got long here, 35.43, position size correctly. Of course, placed my emergency stop below. My end of day stop is a close below halfway of the washout bar. And then, of course, I place my trailing stop level 1.5 ATRs above. And as it moves up, of course, I take partial profits. So I got long here, 35.43. Next bar, huge bar up. Really nice start to the trade where I took 2 profit targets off. I took 20% of the trade off at profitable levels because of this big bar. I want to take while the getting is good. We also got to trailing stop level the very next day. So now I'm in trailing stop mode, which means in the future, if I get a close below a previous bar's low in the future, I will get out of half the position. So higher low V1, position size, entry, emergency stop, end of day stop, close below halfway the washout bar, place my trailing stop 1.5 ATRs above. Next day goes skyrocketing up, took 2 profit targets. Now I'm in trailing stop mode, which means close below previous bar's low in the future, I get out of half. Next bar went up, but not enough for a profit target. Next bar went up again, took some more profits all the way up here, which you can see if you look in the future. That was a good idea to reduce the position size and reduce my overall risk. And then we moved sideways for a couple days. Remember, I'm in trailing stop mode because I got to trailing stop level. And then here on the 24th of August was our first close below a previous bar's low after reaching trailing stop level. And I don't have a full position size because of the trailing stop, but I take whatever the position size is with the close below previous bar's low after reaching trailing stop level, and I locked in a gain of 1.96%. Okay? Next day went up again, hit another profit target, which you can see was a good idea in the context of the chart. Next day moved sideways. Next day, nice rocket bar up again, took more profits off, serious profits. Right? This is down here, took serious profits. And then we had the move down, down, Of course, no profit targets. Did hold the end of day stop here. This bar didn't do much, but from this bar to this bar, I took more profits off, right? And then from this bar to this bar, intraday, took more profits off. So it really shows the value of taking these profits off, especially at the end if you have a losing trade. And then it closed low. And then on this day here, it obviously closed below halfway this washout bar, and I got out. And it shows a 3.03% loss, but it was not, overall, it was not a 3.3% zero loss because of the partial profits, the selling half with the close below the previous bar's low, partial profits here, partial profits here, partial profits here, partial profits here. Does that make sense? So this is in this particular kind of market, it really shows the value of the rules that I teach. So the remaining shares that I had, yes, had a loss of 3.03%, but not even close to that loss because of the moves that I made here and the process that I use. Okay. Yeah, what a great week to show how important having these rules are. So here is Nike. I got long Nike with a deep dip buy. Previous bar, we closed under the 30 RSI. Next day, we closed over the 30 RSI. That was my entry point. I got it at 99.66 with a deep dip buy under 30 over 30. Got long 99.66. Position size, place my emergency stop 2 ATRs below. My end of day stop is the opposite of why I took the trade usually, and I took the trade with a close under, close over. Therefore, in the future, if it closes under the 30 RSI, I'm just going to get out. I place my 1.5 ATR trailing stop level above here. Of course, as it moves up, I'm going to take partial profits. And then, so I got long here, 99.63. Next day moves up strongly, took some profits off, right? Next day moved up, but not enough for profits. Next day moved sideways. Next day moved up again, took another portion of the shares off, and now we're at trailing stop mode, which means in the future, if I have a close below a previous bar's low, I get out of half. Well, this bar here on the 5th of September was the first close under a previous bar's low after reaching trailing stop level, and I locked in a gain of 0.76%. Right now, I was talking earlier about all the rules that I use. When I use an under 30 over 30 deep dip buy, if I get to trailing stop level and then if it comes back to my entry point, I simply get out of the trade at break even on the remaining shares. And that's exactly what happened. So I got to trailing stop level here on the 6th of September. It got back to my entry point, so I got out at break even. So does that mean I just had a break even trade? No. Because I took profits here, because I took profits here, because I had a first close below a previous bar's low, locked in a gain of 0.76%. So yeah, of course it was a profitable trade because of the partial profits and because of the trailing stop level that I used, and with the remaining shares, because of the rules, got out at break even. So yes, all in all, it was a positive trade, and more importantly, am I glad that I got out here at break even? Well, yeah, because the next day it was down, and then Friday was down as well. So hope this shows you the value of really having a process to use and a process to follow. And then last but not least, McDonald's. All right, McDonald's, I got long here on the 30th of August. This is another higher low V2, close below the value zone, rally into the value zone, pullback, and then trigger of a V2. Got long here, 282.60. Position size correctly. Place my emergency stop 2 ATRs below. My end of day stop is simply a close below halfway of the washout bar. Place my trailing stop level up here. None of it mattered. This one did not work at all. Got long at 282.60. Next day went down. Next day went down again. Oh, sorry, I did have a profit target here from here to here, thankfully. And then, but it did hold halfway the washout bar, and then here on the 5th, got out with a close below halfway the washout bar for a loss of 1.28%, a small loss of 1.28%, but really wasn't quite that because I did take some profits on this day. All right, so let's just do a quick recap. Open trade, Zions Bank up 9.33%. GDX had a loss of 2.51% on the remaining shares, but again, took all these profits here. UAL had a loss of 1.47%. Nike, remaining shares got out at break even, but we had the profits here, so that was a positive trade. And then McDonald's had a loss of 1.28%. So we're not always going to have profitable weeks every week, right? We are going to have some losing trades, but what's important is that you follow your process and you have rules to follow. And if you need help with that, of course, like I mentioned, I do teach private one-on-one lessons. I will teach you everything I know, and I will teach you all of these rules. Okay, let's go to weekly trades. Now, weekly trades, weekly bars end on Friday, and I do like to take weekly trades. I do like to take daily swing trades. I even like to take monthly trades as well. I like to have as many different time frames as possible. And again, if I'm in this trade for a long time, it means it's a profitable trade. That's really all it comes down to. All right, so let's go here to XLF. This has been a really nice positive trade for a long time. Oh, sorry. Okay, here we go. I've been in this trade since March 24th. So right off the bat, would you guess that it's positive or negative? It's positive because I've been in it so long. I got in this trade all the way back on the 24th of March. Why? Well, this is a deep dip buy entry. You see the purple line here? This is called the 250-day moving average. On the week that I took it on Friday, because it's a weekly bar, it went and bounced at the 250-week moving average. I got long here, 30.71. My position size, placed my emergency stop 2 ATRs below. Where's my end of week stop? Why did I take it? It was rejection of the 250. Therefore, in the future, if it closes under the 250, I'm just simply going to get out. I placed my trailing stop level 1.5 ATRs above. Next week, went up nicely, took off some profits. Next week, not much. Next week, moved up again, took off profits. Also at trailing stop mode, which, as you know now, if you get a close below a previous bar's low after reaching trailing stop, you get out of half. Here, we didn't have a close below previous bar's low, no bar, and we just kind of moved sideways for a while. And then we moved up, took some more profits. On this week here, I had my first close below a previous bar's low after reaching trailing stop level. I got out of half of the remaining position for a gain of 6.4%. Next week, went up, more profit targets. Next week, went up, not enough for a profit target. Next week, went up, took more profit targets. Next week, went up again, took more profit targets. And then we moved down, kind of sideways, moved up the prior week, took more profits, and here we are sitting right now. I'm still in the trade. The remaining shares that I have on the trade, up 10.44%. Not bad. All right, and the last weekly trade that I have here, XLRE. I took this back on the 2nd of June. Higher low V2 formation in the value zone. Closed below the green line, rallied into the value zone, pulled back, had a V2. Bar 1, 2, 3, 2 goes below bar 1's low or washes out bar 1's low. That's why it's called the washout bar. Bar 3 closes above bar 1's close. Got long here, 36.32. Placed my emergency stop 2 ATRs below. End of day stop, closed below halfway of the washout bar. Trailing stop level right on up here. Next week moved up. Can't remember if there was enough for a profit target there. Next week moved up. Did take profits. Next week came down, but did it close below halfway the washout bar? No, it didn't. So it shows you why that level is important. So it kept me in the trade. Next week, nice big up move again. Took more profits. Moved up again. Not enough for profits. Next week here, important week because I took more profits and I got to trailing stop level, which means now in the future, if I get a close below previous bar's low, I will get out of half. And that's what happened on this bar. First close below a previous bar's low after reaching trailing stop, got in or locked in a profit of 2.12%. Then we moved down, Interesting here on the week of the 18th, August 18th. You see how we got right to the stop level again, but closed above it, kept me in the trade. Next week we went below and closed back above, kept me in the trade. So current, let's see. So currently the remaining shares that I have up 0.76% and still in the trade. But did you see the value of taking the profits when you have them, especially if the market comes and reverses back? So still in the trade, up 7.6%. So XLRE up 7.6%, XLF up 10.44%. So that is what I have for you on the current positions. Not too bad. Like I said, it wasn't a great week. I did have to get out of a lot of the daily trades, but it's a good teaching moment to show you why the rules, the trailing stop rules, the partial profits are so important, especially on a week like that we just had. Okay. Hey, let's talk a little bit about trader psychology, shall we? Most important part of trading. It always is. I promise you. This is from my good friend Steve Burns. This is the New Traders, Rich Traders channel over on Facebook. Steve's a great author, great trader, great mentor. You can follow him on Twitter at @SJosephBurns. You can go to his website, newtraderu.com. Whatever Steve writes, puts out is good stuff, and you should take a look at it. So let's see what Steve has to say here. Oh, and this is also from Akil L. Stokes over on Facebook in the New Trader Rich Traders group, or New Traders, yeah, Rich Traders group. A trader's job is to manage risk, but sometimes traders' emotions and the ego are the risk. Make sense? Steve's 100% right. Our job as a trader is not really being a trader, it's being a risk manager. Risk is the most important thing we look at first. That's our main priority. That's why when I was showing you on the charts, I wasn't talking about profits to begin with. I was talking about position sizing correctly. Where's your end of day stop? Where is your emergency stop? Those are the most important things. It's about the only thing you have control of in the market. So he's true. He's right. A trader's job is to manage risk. But sometimes a trader's an emotion and ego are the risk. So true. That's why a lot of people use algorithms and robots to trade, because it takes the emotion out of it, and it's not a bad idea. It really is not a bad idea. So really the risk to you is not so much the market, but your emotions and your ego. Your ego. I know this should go down. I'm staying in this because it has to go down. Well, sometimes the market does not do what you think it's going to do, and you either want to make money or you want to be right. You should go to the side of making money. Don't fight what the market's doing, especially if you have a bias of what the market is doing opposite of what you think it's doing. That's ego and emotions. Oh, it looks like it's going down. I'm just going to bail. Well, if you were following your process correctly, did it go below your stop? Or did you just think it was going to go below your stop? It's important that you just take the trades and the signals of what the market's doing and not what you think it's going to do. These are all very basic things, but if you've been trading for a while, you've probably gone through some of these things. Just get yourself a good trading process. If-then statements. If it does this, then I'm going to do that. If it does that, then I'm going to do this. And just let it play out, win or lose. You can't force the market to do anything. You're probably not psychic. I don't know. Maybe you are. But if you're not psychic, you don't know. And just so let them get yourself a good trading process based upon good trading principles and just follow the rules. I'm telling you, that is what's going to get you the money in the long run. It's not trying to hypothesize about things. It's not about having predictions of things. Just get yourself a good trading process and follow it. So a trader's job is to manage risk, but sometimes a trader's emotions and ego are the risk. So true. Please follow Steve Burns at @SJosephBurns. All right, here we go. These are the stocks and the setups that I am looking for next week. We'll start first on the daily bars. And like I mentioned at the beginning of the podcast, these markets are not going to be where they need to be yet. If they were where they needed to be right this second, I probably would have taken them on Friday. Makes sense. So it's important. It's a good idea, at least for me, on the weekend to go through your charts nice and quietly, highlight the levels of potential stocks that you're interested in. And then if they get there the next week, then sure, you can consider taking the trade, but only if they get there. All right, so let's start off with Boeing, BA. All right, well, when I look at this chart, what do you think jumps out at me? Well, the 200-day moving average, black line here. 200-day moving average is an important level that a lot of large financial institutions and savvy investors key their trades off for potential good risk to reward ratios. You know, the 200-day moving average does tend to bring in buyers, right? And in buying at the 200-day moving average or the 30 RSI or the 250-day moving average, these are all called deep dip buy setups. And again, this is what I teach in my one-on-one course. This is what I have a great video on udemy.com called the deep dip buy stock trading approach, and that link is in the description of this video. I've sold so many of those online videos. It's a great video, and it teaches you step by step. Not as good as one-on-one and the live course, but it's a great video. I'm actually teaching tonight. I have a student in India, and we will be finishing up the deep dip buy course as well. But when I look at Boeing, 200-day moving average really stands out at me. This is a very good risk to reward ratio. So what I'm looking for next week sometime, either three things. One, it comes down, bounces at the 200. Number two, it goes below the 200, closes back above the 200. That's called an intraday rejection. Or alternatively, it could close below the 200 and then close above the 200. Now, what I really like about this trade is look at the RSI right here, bottom right-hand corner, 3366. You know, I've mentioned many times in this podcast, looking for a confluence or combination of indicators lining up. Well, an under 200 over 200, or some kind of rejection of the 200, at the same time that it rejects the 30 RSI level, that's a pretty good setup. Doesn't mean it's going to be profitable, but it stacks the odds in your favor a lot. So next week, some kind of rejection of the 200-day moving average, I will certainly consider getting long BA. And if it goes under 30 over 30, then the cherry on top, it makes the trade better. So right here, 200-day moving average is something that I am looking for. I like to look at multiple time frames. So here's the 200-day moving average on the daily with the green line. Let's go to the weekly and see if that dovetails with anything. Well, so this is the daily 200, but on the weekly, we're in the value zone. I like that. We are at support from here. So there's a confluence combination of levels on multiple time frames lining up, and that's what's important. Not just looking at the daily time frame, but also looking at the weekly time frame. And if you're trading weekly bars, looking at the monthly time frame. It's important that you look at multiple time frames. Hey, by the way, if you found anything in this YouTube video so far that's helpful to you or valuable to you, if you could hit the thumbs up button, I would really appreciate it. It helps out the channel, lets YouTube know there's some valuable content. So if you found something valuable already, I really appreciate if you hit the thumbs up button. All right, so Boeing. Yeah, I like this setup a lot next week. If and only if next week we reject the 200-day moving average, I will consider getting long Boeing. Etsy. All right, I've been talking about Etsy for quite a long time, but it's just has not done what I need it to do. On the bright side, there are some really nice things happening here on Etsy. We have a double bottom bullish divergence missing right shoulder. So what is that? Well, look, here we have this low, clearly a low. See how deep these red MACD bars are? This means that there's a lot of selling, clearly, but a lot of momentum to the selling. But then you see how we had that slight rally that brought us into green bars. But now look, are we lower here than we are over here? We certainly are. We are certainly much lower here than here. But look, there's no red bars here. Normally, you would have at least some red bars. But so this big picture is very bullish. It means this selling here was very, very strong momentum-wise from a MACD perspective. And then this, although this looks very strong to the downside, from a MACD perspective, it's not even strong enough to get any red bars, which means we're most likely running out of sellers. And if you run out of sellers, what's the implication? The implication is that you're going to go up. But just because you have a double bottom bullish divergence missing right shoulder in play, which we do clearly, I still need a trigger to get into the trade. Well, right now we're at 27.86. A trigger for me would simply be a close over the 30 RSI. But at under 30 over 30, along with the big picture context of a double bottom bullish divergence, I really like this trade. So I will be looking to possibly get long Etsy next week, if and only if we close above the 30 RSI. Gold. Well, let's take a look at this chart. What stands out to me? What stands out to you? Well, it's the black line here. It's the 200-day moving average. Last time we went under the 200 and over the 200, would have been a good trade so far. It's held the 200-day moving average. It hasn't closed below the 200-day moving average. So what I'm looking for next week, I almost bought this on Friday, but you see how we didn't quite bounce at the 200-day moving average? So what I'm looking for next week is either a bounce, a touch, and close back over, giving me a good risk to reward ratio, the 200-day, or it goes below the 200 during the day and closes above. That would be an intraday rejection 200-day moving average, or just a close under and then close over. But everything for me would key off this 200-day moving average, but I would need a rejection of the 200-day moving average first. Russell 2000. All right. Well, take a look. What do you think? What's jumping out at you? What's jumping out at me is this 200-day moving average, or this 300-day moving average, the orange line, or the 250-day moving average, which is the purple line. If next week we reject the 200, we reject the 300, or reject the 250, I will consider getting long this particular trade. Look, see right here, we went below the 200, over the 200. For some reason, I did not take this trade. I wish I would have. I'm not sure what I was thinking. I guess I didn't see it. But that is a completely legitimate trade. We go under the 200, close above the 200. Enter here, position size correctly, emergency stop, 2 ATRs below, end of day stop, where? Close below the 200-day moving average. Now, if I would have taken this trade, my 1.5 ATR trailing stop level would have been about right here. So I'd have entered here, hit some profit targets. Next day, hit some profit targets and got to trailing stop level. Next day, moved up. Don't know if that was enough for profit targets. Next day, sideways. This day here, definitely profit targets. And because I'm in trailing stop mode, I would get out with a close below previous bar's low, which would happen here. So I would have gotten here, profits, profits, maybe profits, profits here, first close below previous bar's low after reaching trailing stop level. That would have been profitable as well. And the remaining shares that I have, I would still be in. But I didn't take the trade. But that's how it would have played out. It would have played out perfectly. So next week, if and only if we get a rejection of the 200, the 300, or the 250, these are the levels I'd be looking for on IWM. McDonald's. All right. Well, I showed you the trade that I had on McDonald's. This was a losing trade with this higher low V2, but next week I could re-enter the trade again. You know, a lot of people, if they get into a trade and it doesn't work, they're like, oh, I'm done with that stock. Well, don't have that attitude. Not every setup's going to work, but don't be afraid to take another setup if it happens. Well, look, on Thursday, this was legitimate again. Close under, close over. I didn't take the trade, and so far it would have been profitable. But this is a close under, close over the 200 coming from a lower low. So it's a lower low, close under, close over the 200. What I really like are higher low closes over the 200. Again, this is something that I teach in my one-on-one course, but what I'd really like to see next week is a move back down, a retest of the 200-day moving average with a good risk to reward ratio, Then if it just simply closes under, I just get out for small loss. But if I'm right, higher low closes under the 200 tend to trend more. This is lower low. This is lower than here. Close under, close over. It's legitimate. I'm not saying it's not legitimate, but I didn't take the trade. But if it does come back, back test, retest that 200, now it's a higher low close above the 200. So I definitely am keeping my eye out for potential retest of the 200-day moving average, but it would be even better because it would be a higher low retest of the 200. Nike, okay, again, I took this trade, worked out positively, but we could definitely have a under 30 over 30. Again, under 30 over 30 is another deep dip buy setup. Took the first one with the under 30 over 30. But if we go lower, we could go under 30 over 30 higher than this low. So it would be a higher low under 30 over 30. So anything higher low is better. Higher low V1, V2, higher low rejection of a 200-day moving average, even a higher low rejection of a 30 RSI. So next week, I will be considering Nike with an under 30 over 30, which would most likely make it a higher low under 30 over 30. Silver. All right. Well, here we go. I am looking at the 250-day moving average next week on silver. That's the little purple line. See, last time it tested it here, and a huge move up. So it seems to be that the market, at least currently, does show respect for the 250-day moving average. So next week, if we come down and test the 250, well, I would definitely consider taking the trade. United Airlines. Okay, again, another trade that I took. This one didn't work out, but what am I looking at? Well, I am looking at two different levels potentially for next week. Another close above the 200 would be legitimate, or if it went lower, a rejection of the 250 or the 300 is what I would be looking for. I always like the lower levels because it's just lower price, and strangely, the lower it goes, really, big picture, the less risk there is. That's how I look at it. So next week on UAL, potential close over the 200, potentially get me in. Ideally, rejection of the 250 or the 300 because it's lower. And look, we have a double bottom bullish divergence here. See the low, deep red MACD bars. We rally into some green, a little bit of green. Now we're lower here than we were here. Yes, we have red bars, but they're not as deep as this. So we have a double bottom, bullish MACD divergence, and we're hanging out around the major moving averages. UBS, okay, a little bit different trade. Now, this is called an island reversal, and I did a video, you can see it in my videos, about why island reversals and abandoned babies are one of my new favorite approaches. Well, this is an island reversal. Like, what is an island reversal? See the three bars here? See how we gapped up? Then we moved sideways? So here, really exciting news for whatever it was. Looks like it was earnings. We gapped up, moved sideways, and then unexpectedly, we just gapped down. You see how these three bars are just kind of hanging in space here? That is an island reversal. Now, right here, right as it formed that island reversal, this is a legitimate short. I didn't take the short, although if I did, it would definitely have been up. But what I've noticed on these abandoned babies and on these island reversals, a lot of times you will create the island reversal and then you will rally back up. What I'm looking for is the low of that island reversal right here. That will be some significant resistance. And so next week, and only next week, if we get to this level, then that will be my short. And then I will put a 2 ATR stop above and a 4 ATR profit target below. So I have a 2-to-1 risk to reward ratio. So that's what I'm looking for. And you can watch my video on YouTube about island reversals and abandoned babies. I go more into detail, but I've had some really good success with these. But again, what I'm looking for is potential short of UBS if we rally next week and get up to 26.28. And if we do, 2 ATR emergency stop above, 4 ATR profit target below. One of the two will happen. In this particular strategy, I'm not phasing out or anything like this. It's OCO. It's an OCO order. One cancels another. I'm either going to lose 1x or I'm going to make 2x, and that is it. But these island reversals are very, very strong, and that's why I'm considering this trade. So quick recap on the daily. Boeing, I'm looking for a rejection of the 200-day moving average. Etsy, I'm looking for an under 30 over 30 in the larger context of a double bottom bullish divergence. Gold, I'm looking for some kind of rejection of the 200-day moving average. GLD. IWM, I'm looking for a rejection of the 200-day moving average or the 300 or the 250. McDonald's, looking for a higher low retest of the 200 as a possibility. Nike, I'm looking for a higher low under 30 over 30 as a possibility. Silver, looking for a test of the rejection of the 250-day moving average or even the 300 if it goes lower. UAL, looking for a close back over the 200 or alternatively a rejection below of the 250 or the 300. And UBS, again, looking for a test of the bottom of that island reversal bar. Now, theoretically, all of these particular trades could trigger on the very same day, right? Like theoretically, that's possible. Does that mean I would take all the trades? No. I have a process and I have rules where I will only take one trade per day on a particular time frame. So these all could trigger all at the same time. But if they do, they probably won't. But if they do, I would have to narrow down which one's the best trade out of all of these. How do I do that? Well, I would look at one. How many confluences and combinations of indicators do I have lining up? How many triggers do I have lining up? If I have an under 30 over 30, but this other one has an under 30 over 30 and an under 200 over 200, well, then that's one's better than just the under 30 over 30. How do they look on multiple time frames? Do I have support on multiple time frames? Which one gives me the best risk to reward ratio? Which one had the best relative strength compared to the rest of the market this day? So, it's a real process to narrow down when you have multiple signals happening on multiple stocks, which one is the best. Multiple confluence of indicators. What's the risk to reward ratio? How do they look on multiple time frames? Was one market stronger than the rest of the market, therefore the relative strength of that market was really good or really weak if you're looking at a short? But again, the devil's in the details in narrowing all of this stuff down to the very best one. And that's what I teach. That's what I teach in my one-on-one course. I think that's why that course is so valuable, because we really get into the nuances of narrowing things down. So, if you're looking for a good teacher, if you're looking for a good mentor that has a lot of experience, that's me. And I love to teach, and my students have been very happy with their results. So keep that in mind. My email's in the link in the description. So those are the dailies. Let's go to the weeklies. Now, again, weeklies close on Friday, so I would be looking for a weekly entry next Friday. Well, here's Etsy again. We talked about Etsy on the daily, but here we are again on the weekly. And I've mentioned this before, but when I am looking at the same stock on the daily and the weekly, that means there's probably something to it. And we covered the double bottom bullish divergence missing right shoulder on the daily, and here Etsy's popping up again on the weekly. Why do I like it? Well, on the weekly, we also have a double bottom bullish divergence. Here we have a low, deep red MACD bars. We rally into green. Now here we are lower than here, correct? We are. But it does have red bars, but these red bars are not as deep as these red bars. So therefore we have a double bottom bullish divergence, which essentially means you're running out of downward momentum. You're running out of sellers. But again, I still need a trigger. Well, we're at 33.17. So what do you think my most likely trigger is going to be? Oh, it's going to be a deep dip buy of under 30 over 30, but it's 33.17, so I have to wait. Does it go down? Does it test the 30 RSI? Does it reject it? If it does, I will consider taking this trade, especially in context that we have this double bottom bullish divergence. So Just to sum it up on Etsy, looking for an under 30 over 30 in context of the double bottom bullish divergence. So that's what I'm looking for on the weekly on Etsy. But I may get the trade on the daily before the weekly, but I may not get the trade on the daily and may end up taking the trade on the weekly, right? So Rio Tinto. All right. Rio Tinto. What am I looking for? Well, black line, 200-day moving average on the weekly. You can see back here in August, September, it did respect the 200. We went above, closed below once, but we closed above, and it's keeping that close above the 200-day moving average. If you've been in that trade, if you've taken this trade here, you'd still be in the trade at profitable levels. Did not take that trade, but next week, what am I looking for? I'm looking for potential rejection of the 200. So I can get there? I have no idea. Could just go racing up and I would miss the trade. And that's okay. But what I'm looking for, if and only if we reject the 200-week moving average next week, I will consider taking the trade. Bonds. TLT. All right. So there already was a legitimate entry on TLT, excuse me, on this week because we went under the 30, over the 30. We also reject the negative third ATR channel, which is also important. I did not take that trade. It's still in play. It currently would be a little underwater on the trade if I'd have taken it, but I didn't. But I'm looking for, and I don't know this is going to happen, but if we do go under 30, over 30 again on the daily, on the weekly TLT, I will consider getting in the trade. So that's it. Very simple. If we reject intraday, or intra-week reject the TLT, I will consider getting long bonds. And then last but not least is VIX, volatility. All right, so what would get me interested in this trade? Well, we have a double bottom bullish divergence. Look at the lows here. See how we had red MACD bars? Then we rally into green. Now, are we lower here than over here? We certainly are, right? Up here, we were in the 25 range. Now we're in the 21 range. But even though we are lower here, MACD bars are green. This is a double bottom bullish divergence, missing right shoulder. Here's the first shoulder. Now we're lower, there's no shoulder. That's why we call it a missing shoulder. So double bottom bullish divergence, missing right shoulder, which is good. We also have an RSI divergence. What is that? We talked about it on Zion's bearishly, but this one's bullish. See the low here? Look at the depth of the RSI. Pretty low. Now we are lower here. Look at the depth of the RSI. It's higher than here. So we have a couple divergences going on here. We have a MACD, double bottom bullish divergence, missing right shoulder MACD divergence, and we also have an RSI divergence. This just indicates we're probably running out of sellers. But I still need a trigger. We're at a 2788 RSI. What I'm looking for is simply a close over the 30 RSI for a potential entry. That's it, especially with the MACD divergence and the RSI divergence. So that's what I'm looking for again next week. Quick recap, Etsy. I'm looking for a rejection. It has to go lower. I'm looking for a rejection of the 30 RSI. Rio Tinto, looking for a big move down here to the 200. Does it get there? I don't know. But if it does, I will consider it. That's RIO. Bonds, TLT, I'm looking for another under 30, over 30, intra-week rejection of the 30 RSI. That's potential. And then VIX, looking for a close back over 30. And again, just like on the dailies, all these weekly trades could potentially trigger at the end of the week. Would I take them all? No, I would narrow it down to the best one. What's the best one? Most confluence of signals, best risk reward ratio, support on multiple time frames, and relative strength of what's going on. All right, I said I was going to talk a little bit about the markets in general. So let's look at the Qs. Let's look at the SPY and see what they're showing us. Kind of some mixed signals here on this as well. if we look back in time here, we created this big gap here. This is called the fair value gap. And if you remember last week, I was discussing that if we get into this gap, it's going to have some problems and most likely go down. Well, it's exactly what happened. But we have a couple trend lines here. You can see the trend line from here to here. We could come back test this trend line. That would give us some potential support, technical support, or here's another trend line down here from these two bottoms. So this trend line here could offer us some support to the downside. If we go lower, this trend line here could offer us some support as well. But to the upside, we're back in this gap. So we're kind of in a weird position here where if we go up higher, I think we're going to have selling pressure. If we go down lower, we're going to have support from the trend line. So it's very unclear to me where the market's going to go. So as always, it's best just to follow your process that you're using for your entries and exits. But I do like to kind of look big picture. But again, to the upside, we have this gap. The market didn't like that gap before, clearly. And now we have a couple trend lines. This one's a little steeper than this one. So my kind of guess is we may go sideways next week. I don't know. I wish I knew for sure, right? But just want to point out, we do have some resistance from the gap up here. We do have some support from the trend lines down here as well. And then let's look at SPY. And it's the same thing. Here's the gap. Look, every time we got into the gap, we failed. We failed. Got into the gap, we failed. Does it mean we're going to fail again? I don't know, but in the past, it has respected that gap. So that's what I'm saying. A move up into this gap here, probably a little toppy. And then we have some trend lines to the downside, the steeper one connecting these two lows here. Probably be some support here, or if we have lower, certainly some support here. So I think we're going to be range bound in between these levels here. One thing to be a little concerned about at the moment is TLT. Oh, not TLT, excuse me. UUP, which is the dollar. And you can see the dollar has been on a tear. I mean, literally straight up. Historically, the dollar is negatively correlated with the market, meaning the higher the dollar goes, more likely the market's going to go down. So this is a little bit of a warning sign that this market is so high. Another thing that affects the market are bonds, and you can see the lower TLT goes, the higher the interest rates go. So, TLT has definitely been in a down move, which has added some issues to the market as well. So there's a lot of mixed signals. Please be careful with everything, but going forward next week, I think we're going to be pretty much range bound. I don't think we're going to go a lot higher. I don't think we're going to go a whole lot lower, but what do I know? I'm just telling you what the signals are saying. So listen, everybody, if you like today's podcast, I would really appreciate it if you could hit the thumbs up button. Helps out the channel. If you're interested in my one-on-one course, it's a great course. Like I said, I've taught people from all over the world. I think the best way to learn anything is one-on-one with a very experienced and a very patient teacher, and that is me. The course does cost $1,750, but it's worth every penny. I teach you step by step all 5 of the different trading approaches that I use. I will put you through the ringer and make sure that you know everything, and I will not let you go as a student until I know you know all of the rules. It's a great course. Consider reaching out to me. My email is in the link in this description. If you like online video courses, I have a great online course available at udemy.com, the deep dip buy stock trading strategy. I've gotten so many good reviews, such good feedback from people from all over the world on that course. That's a great option. It's very affordable. It's only between $12 and $15. And so the link to me, the link to the course is down below. And again, I like to leave everyone off with, listen, please try to go out and do something nice for someone today. If we all did one nice thing for someone else each day, it would make the world a better place. It really would. Just obvious, right? And if you could go out and try to do one nice thing for an animal today, I would really appreciate that. I was raised with a lot of animals. They were my friends growing up. And I can tell you from experience that animals appreciate an act of kindness as well. So one nice thing for another human, one nice thing for an animal today. It would make this world a better place. So I appreciate you being here. I hope you found this helpful, everyone. God willing, I will be back with the podcast next week, and we'll see what happens with this crazy market. But enjoy the rest of the weekend, and really appreciate you being here, and take care. All right. And on the way out here, I have to run the U.S. legal disclaimer. Bye, everyone.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.